Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Wednesday, July 5th, 2023, and I'm pre-recording this Trading Places Live for Thursday, July 6th. Futures currently are down a little bit this evening. We currently show Dow futures down about 74 points, S&P 500 futures down 7, NASDAQ futures down 20. So we're ranging from about down 0.15% to about 0.2%. Crude oil up another 19 cents per barrel. That's up around $72 a barrel. And the U.S. 10-year Treasury yield, which had a big move on Wednesday, rising 9 basis points to 3.94%, is up another 2 basis points to 3.96%. So getting very close to 4%. We have seen higher yields throughout the last year or two, creating some havoc in the market. So far, that really hasn't been the case this time, although we are hitting some levels that we had not seen in a while, and we'll go over that chart on the 10-year Treasury yield in just a moment. Going through today's agenda, we'll start off with the daily market recap, talking technically, chart of the day, what's hot and what's not, earnings spotlight, and the three you must see. And in the three you must see, I'm going to feature three seasonality charts, three companies that tend to perform really well during the month of July. So we'll take a look at that toward the end of the show. Let me go ahead. Before we get started, I want to make sure everyone is aware that we are having a big event on Thursday evening. So while you're listening to this, it'll be later in the evening, starting at 7 p.m. It's not too late, but you do have to register. So go over to earningsbeats.com and you'll find the link close to the top of the page. You'll see the bullseye forecast. Just simply click on that link. It'll take you to a page where you can sign up. Hit that sign up button. It'll take you to the bottom of the page where you can type in your name and email address and then join our free virtual event. No credit card required. You will be added to our EB Digest newsletter. That's a 3 times a week newsletter. That is also free. No credit card required. You can unsubscribe at any time. But it's going to be a great event. We're going to talk about a number of things, a little bit about where we currently stand in the market. What's transpired in the first 6 months of the year. And then we'll talk a little bit about some of the signals that I use at Earnings Beats that have helped me to pretty accurately forecast market action over the last few years. So we'll talk a little bit about that, where we stand on those indicators now and what we're looking for in the second half of the year. So please make sure you get signed up for that. Seating is limited, so you want to sign up as quickly as possible. I think we're going to be okay, but we are getting close to capacity. So we'll see how that works out. But just make sure you get signed up as quickly as possible. Moving on to the action, I wanted to go over Wednesday's market recap here. The Dow Jones Industrial Average finished down 130 points. S&P 500 was down 9. NASDAQ down 5. Mid caps down 23. Small caps down 18. And even the red hot transportation group finally took a pause, down about 88 points. So small caps, mid caps were hit the hardest. NASDAQ 100 pretty close to the flat line. Among sectors, utilities that was the best sector of the day, rising a little bit more than 1.1%. Communication services up about 0.75%. And then to the other side of the spectrum, materials, the XLB, down about 2.5%. This was a group that had broken out above some key resistance at about 81 and change. Now we're back down closer to 81. Watch that rising 20-day moving average. That's where I would like to see materials take a turn and start to move back up again. Looking at various industry groups, internet stocks within that communication services group having a strong day, moving back up above the 3,000 level, getting close to breaking out. Watch to see if we can make this breakout. That would be a really bullish signal if we were to break out in this group heading into earnings season. Airlines continuing to post just one day after another of strong gains. We have seen just a massive run to the upside in about the last 5 weeks in airlines. We were trading just a little bit above 150 when June began. Now we're at 194. That is 44 points, which is roughly 30% higher in the airline group in just the last 5 weeks. Pretty amazing. Non-ferrous metals, not doing so well. This is one of the big reasons why materials were weak, down almost 4% in non-ferrous metals. Steel also, even though it's not shown here, steel having a rough day on Wednesday as well. So those two groups heavily influenced the materials group lower. Moving on to the 10-year Treasury yield. So this was the move that we saw on Wednesday, jumping up, a little over 8 basis points, 3.945%. So rounded up to 3.9 for 3.95%. And as I mentioned at the top of the show, currently that 10-year Treasury yield 3.96. So we are still moving higher after the close on Wednesday. When you look back at the S&P 500 and what's happened, you know that we had the big rise in yields heading into the October 2022 period. And of course, that's when the S&P 500 went down and set its bear market low. Then again, in February into March, we saw a pretty big move to the upside. And I believe it was during that period, the market right here, February into March, the S&P 500, you can see dropping there. And so going back to this 10-year Treasury yield, that move up right there over about 4 or 5 weeks, that triggered another big sell-off in the market. So we've been overbought, and here comes the 10-year Treasury yield again, breaking out above recent highs, threatening to get back up above 4%. 430, 432, something like that was the high we saw in October of 2022. And we are back on the move to the upside with that 10-year Treasury yield right now. Remains to be seen what happens to the overall to the stock market. I believe the market's looking down the road at this point, looking at, the Fed's talking about raising a couple more times. They did in their minutes discuss the fact that they were looking at a much slower pace of rate hikes. We'll see what actually transpires over the next few months, but my guess is we get one hike. I don't know about the second one. We'll just have to see how some of this inflation, how the inflation reports come in. If inflation continues, to stall or to slow, and at the same time, we start to see more signs of economic weakness, I think that'll put pressure on the Fed to stop the hikes altogether. But we do have some time and some more reports coming out, so we'll continue to look at that as it evolves. But at least for now, we do have that 10-year Treasury yield on the rise. On Thursday morning, we will be getting the ADP employment report, and then Friday morning, we get non-farm payrolls. So we do have a couple of reports that can really move the market. It certainly could have a big impact on what goes on in the bond market. So let's see what happens here over the next couple of days. We'll go from there. Moving on to talking technically, S&P 500, you can see after moving up through 4450, did come down slightly on Wednesday, dropping about 1/5 of 1% or 0.2 of 1%. AD line, though, still looks very strong. I would not expect much selling, maybe a little bit down to the 20-day. And if we get big reversals, with gap ups, and it could happen with the non-farm payroll coming out on Friday, we could see a big gap up in the morning and then followed by some selling, maybe a big bearish engulfing candle. That type of a candlestick with a negative divergence in play could maybe lead to just a little bit more selling. So rather than a 20-day test, which would maybe be 2% lower, perhaps we would see maybe 4 or 5% back down closer to that 50-day moving average. A little early to go there just yet. I want to see how things develop. But again, a big reversing candle with a negative divergence could lead to a little bit more selling. The NASDAQ 100, you can see here, testing the recent high up near that 15,250 level. We actually got as high as 15,275 on Wednesday before coming back down and closing closer to 15,200. I think the NASDAQ 100 looks very similar to the S&P 500, although with this most recent move to the upside in the NASDAQ 100, you can see that that PPO really is not following suit at all. So it does look like maybe there's a little bit of a momentum issue, especially on some of those larger cap NASDAQ names. That's going to be maybe something to watch here over the next week or two. And if we do see a pullback, more selling in that area, the big question for me is going to be, do we see that money rotate into areas like the financials, industrials, healthcare, those types of areas, or do we see it leave the market? And leaving the market would probably set up maybe for that 4 to 5% drop. I think the rotation, if it were to occur, would probably lead more to sideways consolidation in the market. So that's at least a couple of different ways maybe to look if we do start to see a little bit of selling in the near term. Moving on to the IWM, so small caps. I'm still liking the small caps. I do think that rotation is going to benefit this group. I can't tell you if it's going to be tomorrow or early next week or late next week, but I do feel like this is a group that's going to move higher. I've been trading both the IWM and the TNA, which is the triple leveraged IWM or leveraged small cap. But as we got up here above 187, I kept saying 188 to 189, that area, anything in that zone is a good time to unload some of the leverage, because you want to see the breakout. You don't want to just assume it's going to happen. We've had double tops before. I mean, if you go back here to November of last year, pretty clear double top. We were in an uptrend. We pulled back to the 20-day, slightly below it, right back up, double top. If you anticipated that it was just going to go right through, things would have gotten pretty painful over the next 2 to 3 weeks, maybe 4 weeks, as we went back down rather substantially. If you look back in April, we moved up, pulled back below the 20, went back up, double top, and then right back down to the recent lows. So it's not unprecedented for prices to stall here and then to move back down. Now, I believe it's not going to move back down very far. I've just seen some really good signs for me, believing that this group is going to break out. And so after getting out of the TNA when the IWM was in the 188, 188.50 area, I actually think this pullback, I actually started picking back up some of that TNA during the day on Wednesday, and we'll see if that 20-day moving average holds. But if we go back down to the 20-day, I will probably be back into the TNA that I had sold back up above 188 or in that 188 range. Moving on, let's keep it going. Still got a lot to cover. Let's talk about the chart of the day. So this is something that I do 3 times a week for our Earnings Beats Digest subscribers. If you scroll down on our homepage, you'll see an area. Even if you don't want to attend our Thursday night event, which I'm not sure why you wouldn't, but if you don't, you can still sign up for our Earnings Beats Digest newsletter simply by scrolling down on our homepage, typing in your name, email address, hit that subscribe button, and you will be set up to receive this newsletter 3 times a week, Mondays, Wednesdays, and Fridays. Normally, we try to get it out around 8:30 in the morning. It's a very quick read, 2 paragraphs and a chart. So you're probably talking about 5 minutes tops from the time you open the email to being able to get through the whole thing, looking at the chart, seeing visually what I'm talking about, and then going through a couple of paragraphs. But I think it's a great way to learn a little bit about how we approach the stock market at Earnings Beats. And of course, we'd love to have you. And when we do have these free events, like we're having on Thursday evening, anyone who is a subscriber to our EB Digest newsletter will automatically get an invite. We'll send out room instructions for most of our free events. This one does require registration, and then we'll be sending out the room instructions to everyone that's registered. By the way, anyone who is currently a paid member at Earnings Beats has already been automatically registered. You don't have to register. If you do, no big deal. But we have you registered. We'll make sure you get room instructions for sure. All right, so looking at the chart of the day, I had mentioned one stock on our short squeeze chart list Wednesday morning, that went out to our members. So I thought I'd give you another one that I think looks pretty interesting, and that is Beyond Meat. Beyond Meat, heavily shorted. It is one of the top. Let me see. I just updated this chart list. The one you're looking at's a little older, but let me get you the latest here. So right now I am showing Beyond to have the third largest short percentage of float on our chart list. We have 45 of the most heavily shorted stocks in our chart list. Beyond Meat is third out of 45. 42.99% of its float is short. In other words, 42.99% of all of the shares that are available for trading have been borrowed and have been shorted. That's a lot of selling that's taken place. Those are guaranteed buyers at some point. Now, what you want to watch for is volume picking up, moving through the average of the last 50 days, which currently is about just under 3 million shares. And notice today we had a nice day, up almost 5% on Beyond Meat. And look at that volume. Volume was 4.2 million shares, which is roughly 40% above normal, above the average. Now, we didn't get a breakout, but we did threaten one. Beyond Meat is a stock I would be watching. There's a handful of stocks on this short squeeze chart list that I think look really interesting, and Beyond Meat is one of them. You can see when we get the volume going, here was a 15 million share day. We went from, I don't know, maybe $10.75 all the way up to almost $14 that day. If you look back in February, you see the huge volume day here. We had closed at just a little over 17 the day before. We went up over $22 the day of all this volume. So, and I like to use these as short-term trading vehicles, not a buy and hold. You're looking for the fact that there's an imbalance in demand versus supply. That's what gets triggered when you have a short squeeze. You get, if we get a breakout, you'll see some technicians buying because it's a breakout. Well, anybody who is shorted in here is losing money on a breakout. And so they may cover, in which what they're doing is they're buying and then they're returning their borrowed shares. That combination can be lethal and can really send a stock soaring. So I just want to mention Beyond Meat. Again, this doesn't mean we're going to go soaring at this point. We want to see that breakout. We want to see that volume coming in. And then for those who enjoy taking big risks for big returns, a stock like Beyond Meat might make sense. For those of you that are risk averse, stay away from Beyond Meat. You can see chasing this breakout right here up at 22 and change looked really good intraday, but by the end of the day, it came back down and closed at 19, and it started a big slide in the stock. So if you just buy a breakout and hold it, it can get really painful. That is not at all what I would be interested in doing. If I traded a stock like Beyond Meat on a breakout and it comes back down and fails to hold the breakout at the close, I'm out. I'll take that loss that day. If I was down, I would take the loss and move back to the sidelines. I'm not interested in holding these stocks as they go back down to new lows. And again, that's what happened in February. 3 months later, there we were back down at lows that had cleared the prior lows. So sometimes these false breakouts can simply mean shorts dig their heels in even deeper. And on that breakout, you could see a lot more shorting taking place, therefore not allowing that breakout to confirm into the close. So we want to be a little careful for sure. Let's keep moving on. What's hot and what's not? So let's talk about some stocks that are hot real quick. First, we have Rivian. Clearly, we've made this huge breakout above $16. This is a stock that actually I pointed out to members a few weeks ago because I did think it was starting to make a nice move. We had a potential bottoming head and shoulder pattern here. We have since broken out above it. And now we're up here challenging 21, 22 resistance from here. If we get through $22, Rivian's got a great shot to go up to 28. Sirius. So this is XM, Sirius XM Holdings. Another stock's been under a lot of accumulation here just over the past week or two. Big move up from 360 to about 460 just over the last 2 weeks. Volume's been strong. I don't really see a whole lot of major resistance till we get up to about 560. So this one could have another dollar or so to run. Visa, I wanted to mention, it's been going sideways for a while, but look at this recent breakout, volume picking up. I think Visa looks pretty hot now. How about what's not so hot? AZN, AstraZeneca, after moving up to a new 52-week high in April, looked like it was starting to wobble a little bit. Well, it did a lot more than just wobble here so far this week. Big gap down back on Monday. We did get a little bit of a recovery today, but I'm not so sure this sticks. I'd be a little careful. I don't like that breakdown there. TradeWeb, TW, another one, had been going sideways for a while. We've seen a lot of bottoms over the course of the last few months, print from about 67 to 68. Well, we broke down below 66. Volume started picking up. And you can see since it hit 72, a little over, well, maybe about 2 weeks ago, it's been down about 10%. Definitely not hot right now. AU is another one that we'll go over here. So looking at gold, this is Anglo Gold Ashanti or Shanti. But this is a stock that topped back in May over $30. We're now down below 21, so we've dropped about 30% and not really showing any signs. You can see that PPO moving lower, so not really showing any signs of bottoming just yet, continuing to trend and trade below that 20-day moving average, which is dropping, and below the 50-day. So those are your what's hot, what's not stocks. Looking at earnings spotlight, I just had one stock I wanted to show you. This is a stock that I feel really strongly is going to come up with some pretty good numbers. Delta Airlines, DAL, the airlines have been on absolute fire. No pun intended, but they are certainly flying right now. Delta Airlines, one of the strongest. And if you look down here at the relative strength, Delta versus the airline index has been going straight up. So while Delta's been going up and the airlines have been going up, Delta clearly has been going up faster. And the airlines have been crushing the S&P 500 over the last 5 weeks. So you've got a really strong group, and you got one of the strongest stocks, excellent volume trends, AD line soaring. I'll be really surprised if Delta issues any kind of warnings or anything like that. I expect a revenue beat. I expect an earnings beat. And I wouldn't be surprised if we see some raised guidance for the upcoming quarter and for the balance of the year. Last thing, the 3 you must see. I'm going to give you 3 seasonality charts. The first one is Team. This is Atlassian. This is going back 9 years. And I want you to look at July. It has gone up all but one July since it went public, which is clearly the best calendar month in terms of the odds of it going higher. And if you look at average return, May is at 6%, January 5.6%. These are average returns for those months. August is 8.3%. So we have a few pretty good ones, but nothing tops July. Average return, 10% for the month of July over the last 9 years. So Team is one stock that certainly likes the month of July. Another one is in the biotech space. It's one of the big biotech names, Amgen. And if we pull this back for the last 20 years, July up 85%. So that would be 17 of the last 20 years. We've seen Amgen rise during the month of July. The average return, 8.1%. And that really just sticks out like a sore thumb, because if you look at all of these average returns, the second best month for Amgen over the last 20 years is November, which averages 1.5%. Again, July averages 8.1%. So Amgen seems to really make its hay during the month of July. We'll see whether or not that continues. And then finally, the last one I have for you is EPAM, which again, you can see the last 5 years going up each of the 5 years. If we go back all 12 years since it went public, 83% of Julys are higher. And this one's got some other months that are just as strong as July, maybe even a little bit stronger in terms of average return. But I wanted to mention 5.7% during 1 month average over 12 years is pretty strong. And you can see that 83% is just slightly above the November 82%. EPAM loves the month of July. All right, that's all I had for you today. I appreciate you tuning in. Remember, on Thursday evening, 7 p.m., Bullseye Forecast, the mid-year update. I hope you can make it. I've got a lot of great information to share, a couple of announcements, key announcements, some things we're going to be doing at Earnings Beats. I think you'll appreciate all of that, so I hope to see you then. Have a great day, everybody. Happy trading.